Boom, we're live.
Okay.
Money Mobsters. I think this is number 9.
Number
We
9.
have a lot to talk about after missing last week.
Yeah,
Dougie was on the
wow.
road, so he was out there living life and doing things, and a lot of stuff has happened in the last 2 weeks. Dougie, where you been?
Oh man, I have been living the life. Let's see. Last Monday, I flew out to beautiful Boca Raton, Florida. Left the freezing cold of Houston, and got to beautiful Boca Raton. Stayed at the amazing Boca Resort, and met up with the Queen herself, Quantesla, and Miss Laura for the D-Wave conference. They had a technical kind of showcase, and we got to see a lot of really cool presentations about how quantum annealing is being used by their customers today, and that was fantastic.
So, what was the big takeaway from the conference?
The biggest takeaway for me is really finally getting an understanding of the difference between what D-Wave is for and what differentiates them from their some of the other quantum names. And so there's really two kind of core technologies. One is annealing, and that is what D-Wave does. Now, that is a technology that is functional. It works. There's a certain problem set that traditional computing, it's not that it can't do, it would just be that it takes many factors of 10 times longer to do it, to solve the problems that the quantum annealing can do much faster with their hybrid solve, their stride hybrid solver. It was really funny. They have just branded their hybrid solver with the term stride, so all of their company presenters were all messing up the name because it's so new. They're all just used to calling it their hybrid solver. Oh no, the stride hybrid solver. Common theme of the week.
That's like the NVIDIA self-driving project that they just launched. No one can pronounce it, right?
Yeah.
And then off to New York, and I was seeing photos all weekend. I had a friend in town, so I was here. We were doing our own thing, but I was seeing the photos roll in. It looked like a really good time.
It was an amazing time. And yeah, I was definitely trying to FOMO you and shame you into attending.
There's nothing I could do. We had our thing scheduled first.
I know.
Yeah.
I know I told you that I wasn't going to make LA, but it turns out that I had put in the calendar the wrong dates of the other thing I had scheduled. So the weekend is open.
Oh.
So we are going to hit it, but we are going to hit it hard.
That's nice.
Yeah. So
you're going to have to one up the suits each time. You're going to have to keep beating yourself, and it's going to get difficult.
All right. I have a concept for LA. It's the city of angels. So I'm going to play the devil.
Okay. Interesting.
Thinking about going that route.
What would that look like? Just like a Halloween costume?
No. Not a Halloween costume. No, just got to do it right and have the drip turned up.
You're going to have it makeup and stuff?
No.
Okay. I just wasn't sure how committed you were going to be to this,
No, it's not a college football game.
It's a New Jersey Devils hockey game.
Yeah, no. Just a little play on that theme, because I already did the white, so I can't be like, oh, I'm an angel in the city of angels. No, that ain't gonna play. But yeah, I've got a concept.
Well, I'm excited for.
But I'm worried now because it's a thing. People are wondering, what's he gonna do to?
Yeah, what's he gonna do next? Exactly. That's a good problem to have. You did this to yourself, though. You can't complain.
Right. Well, what I realized, I also didn't realize I was going to have to give a speech. So appreciate you, Amit, hooking me up with that at the last minute. the last second. I didn't have time to worry about it because he's just like, here's the microphone. But yeah, so what I decided was, because I'm dressed like kind of a clown, there's no reason for anyone else to be shy.
Sure.
So if you came there on your own and you don't know anyone and you're a little shy, you're a little bit introverted, but you already like took the leap to get out there, you know, you can talk to me because I'm the one dressed like a fool. So yeah. So.
And if too many people are hounding Dougie, you can come talk to me.
Oh, dude, you will not suffer for people to talk to. Trust me. Trust me.
Well, I just remember in Miami, you had a pack. You and Adam both always had a pack. And Matt was getting raided hard.
Dude, Chris Patel sat down next to me. Like, we still had an hour left, but they had just like finished amidst small groups that he was sitting with, and they were gonna start getting that room ready for the next thing it was for. And Chris sat down next to me, and bro was exhausted. I mean, he was spent. His voice was gone. And I'm like, dude, we told you this was a work day. You didn't believe us. But this is going to be a work day. Steve was hammered. Steve didn't go live. Steve didn't go live on Monday because he'd lost his voice from talking to everyone.
It's wild.
Yeah.
It's wild.
Amit was so I had made a mistake. I remember that Amit had a problem staying hydrated and keeping his voice up, but I did not consider Matt and Steve and Chris and Tanner and Tevis and the whole gang who was there also needing that support. So I had like the facility staff under, hey, Amit, don't let his water get empty, you know, like that type of thing.
Yeah.
But,
good.
Yeah, but I didn't put that together for the rest of the kind of the main features. So I'll definitely make a point to do that next time.
It's so cool that we have something like that, like, you know, people in the community sort of like leading the way and putting these types of events on where we can all just have a moment where we can all you know, actually like meet up in real life and get to know each other a little bit, share stories, and yeah, it's just really cool. I don't know, definitely didn't expect it. Like when I first started looking into Palantir, and I was like basically just Googling on YouTube, you know, for like more information about the company. I didn't think I'd be like flying to Miami to meet a bunch of people who also made money on Palantir. It's just like,
yeah,
bizarre twist of fate.
Dude, it was a blast. It was a blast. Stephanie was there, freaking Matt was there. You know, Tess was in town. Ray and Michelle came up. So, you know, like they're like first class people. Ray actually went out. So to have everyone kind of come through security and get checked in and everything, like, I mean, Miami wasn't as organized, but you remember like there was like a check-in at the door, like if you're registered. So in New York, though, it's like 17 degrees outside.
Right.
And Ray, God bless him, went out there and just stood in line with people and shook hands and started conversations with people out in the freaking cold. Like didn't go inside, just went outside to make sure everybody felt like they were already like getting engagement and value for their time. So I was really impressed by that. So good on Ray. That was amazing.
Ray's the man.
Ray is the man.
So
I'm so lucky to live near him. Like we hang out all the time.
That's great. So we've got a lot to get through here. So just to give a quick rundown on some of the things that we're at least going to try to touch on. Obviously, Anthropic and SaaS devastation, private equity taking a hit yesterday, just like a lot of quality names getting hit, even like some of the ratings companies. We've got Google earnings that came out. We had Meta. We had Microsoft with their RPO and the OpenAI 42% disclosure. We want to talk about PayPal. We're going to talk about Waymo raising money. We could even talk about Robinhood taking a dip. We're going to talk about that chart right behind Dougie, the Bitcoin chart. I don't know if you want to talk about X, the X SpaceX merger.
I mean, God, lots happened in 2 weeks, bro.
Yeah, Ken Griffin was talking yesterday and said he might potentially run for office. We had some Tesla
Disney's
news.
getting a new CEO. PayPal is
PayPal, yeah.
finally paying.
Then we had a juicy interview, actually two juicy interviews from Jensen from earlier this week, talking basically about the OpenAI investment. And some reporters really just tried to get under his skin a little bit and trying to figure out like what's actually going on and how committed are they. And then, yeah, just then we can talk about what opportunities we're seeing here. I personally, I don't feel like all software can go to zero without there being any opportunities. Like indiscriminately, AI is going to kill all software companies. That doesn't really quite make sense to me. Some of them are going to fare better than others. Some of them even already use AI, so they're not going to be replaced because they're already running at that pace. It's going to be hard for people to catch up. And if it is true that AI is going to take over software, why are like names like Nvidia and Broadcom and TSM getting hit? It doesn't quite add up.
Whoa. Okay. I know that's probably starting at the bottom, but okay, you just made that point. And I've kind of been saying it all day. And then I just saw that from someone else. And man, it's like, yeah. Share my screen. Present. All right, man. When Dougie is agreeing with this cat, and then we hear Austin say the same thing, how many times do you need to hear it, folks? How can the market be both bearish software stocks because of AI agents while simultaneously selling off AI hardware and model companies who the AI agents will learn and live on? I mean, that's...
Well, can you sort of summarize?
He makes some more points down here, and he says maybe it's not yet, but this main thesis is the basic question you and I are pushing back on with the tradings today.
Yeah, I mean, even companies like Synopsys and Cadence were getting hit. Like those are pure hardware plays.
Yeah, I mean, doesn't this feel like DeepSeek, but for SaaS?
And the part that really doesn't quite add up is like you're going to have a lot of software companies that have a lot of implied trust and reputation to them that CTOs are going to need. So for example, Workday or Intuit, there's a lot of personal information there that a lot of people aren't just going to trust to some random vibe coded company that just showed up yesterday. It's you can't just migrate all of your stuff over at once. Like leadership teams have more important stuff to do than to like try and cut corners on their HR software. I don't know, it just seems like a little bit of an overreaction here. And if it is true that Claude is also going to just commoditize all software that's being made, Amazon owns 19% of it and runs primarily on AWS. Why isn't Amazon ripping?
Yep.
Like this price action doesn't quite add up. You know what I mean?
Right. Yeah. It's like it's like Wall Street was looking for a reason to rip the beta out of everybody. But I don't know who's selling. Like you don't get Palantir going down 13. You don't get a $400 billion company like Palantir going down 13% in a day because retail sold. You know what I mean? Like the same morons who didn't buy, this is what I think is happening. The same morons who didn't buy this whole, the whole time, and they were like, we get to the end of the year, we've got to have some exposure to all these AI names because our clients think we're fools if we don't. They're now having to sell it off because they still don't believe in it. And you can't make retail sell. I think we're going to be writing all the same articles in 6 months that we did 3 months ago, when we were saying, oh, the retail shareholder couldn't get shook out. And you don't have to sell.
Well, that muscle is really like strong because really for like the last 18 years or so, buy the dip has sort of always worked out for you.
Yeah.
If you've just continuously bought volatility events.
And a whole bunch of money is coming in on this Friday. Like, you know what I mean?
Yeah, and people are going to be getting their refund checks, their tax refund checks. They're going to be getting
Well,
their
the
bonus.
401k deposits are coming.
Mm-hmm. Yeah, it'll be interesting. I'm not sure what there is to be that bearish about, if I'm quite honest. Maybe what do you think about the Fed chair pick? We haven't talked about that yet.
I mean, Trump said he's going to be dovish. He's definitely an inflation hawk, but I mean, I don't know what the president was thinking about picking him. It seems like one of those things that's not aligned well, right? This almost seems like him not hiring Isaacman to spite Elon. So he's kind of zigging when he should zag, but he's just trying to spite somebody by hiring this guy, and then he's actually not going to be the guy that gets nominated in the end and confirmed.
So you think this guy's not going to get through, and this is a setup guy?
It would not surprise me at all. And everyone's going to say it's a taco, but it's just DJT anchoring his negotiating position with whoever he's negotiating with a inflation hawk. So
yeah, it's not over till it's over, right?
Right, exactly. Especially with this crazy person in charge.
A few of the names that got ripped. I don't know if you're interested in any of these. Salesforce, ServiceNow, Intuit, Adobe, App 11, which I have still been buying.
I hate all those except App 11.
Okay.
But okay. So let's look at the software thing again. And I guess this is just probably going to eat the large portion of this beginning conversation because it's so
like it's a good number
related to everything, right?
Yeah, like Datadog, Workday, like the list just goes on and on.
Yeah. So look, Jensen was saying Jensen gave an interview today when he was talking about the agents will use software. They're not going to reinvent the software. If you made a new person from scratch and they were learning how to do things and you gave them a hammer, they wouldn't say, no, I don't want that hammer, and then go build a hammer from scratch, right? They would just use the hammer you gave them. And I think that's a pretty decent metaphor, except the SaaS company wants to charge you for every swing of the hammer. I don't even know what that was. Sorry about that. So
the SaaS company wants to charge you for every swing of the hammer.
Yeah, where your agent can make you a hammer that you don't have to pay for.
Well, it's not free.
You're just paying to run the agent. You're paying to run the agent, and there's probably there'll be a cost curve there that now the SaaS companies are going to have to stay under. They're going to have to make it more economically viable for you to use their software than to have an agent develop the thing for you. And the agents are really fast, and they are transacting in cryptocurrency with one another already without being told to.
Well, speaking of cryptocurrency, let's have a look at your...
So my boy Steve said yesterday, why is anyone buying Bitcoin? I talked with Matt Money. And they're having an argument about whether Bitcoin is still serving as a store of value. And that's a fundamental misunderstanding of what it is. It's not money for the internet. It's the internet of money. And you're seeing the Claude bots start to use it as such. So the robot agents are now essentially trading energy to do tasks back and forth with Bitcoin. Does that make sense?
Sort of. I mean, the last 4 or 5 years, almost every time I end up in a Bitcoin discussion, and inevitably comes back to inflation hedge and short the dollar and fiat is a broken system. Like those are the recurring themes that I always hear about.
Yeah,
So
but it's also proof of work. It also represents it also represents a finite component or measure of energy.
Yeah, but if I'm going to buy Bitcoin and the reason that I'm buying it is to be an inflation hedge, it did just prove that it's not doing that because the dollar just got really weak and Bitcoin went down with it.
That's a fair assessment when you have to remember that Bitcoin is still in its infancy as a currency.
Right.
It is still closer to being a garage science project, middle school science project, than it is to being a big boy currency.
Yeah, I just think
the thing to remember is that every bit of value, every bit of a transaction requires energy. So the trust and the actual value that is transacted back and forth is not a dollar. It's a discrete amount of energy used to perform the transaction.
But even if you get to like proof of stake, like Ethereum's been getting hit too. So it's been all
proof of stake is not my favorite. Proof of stake basically means, the more I own, the more I control.
But do you remember the digital gold argument? That was a really pervasive one in 22 when inflation was going nuts.
It's a useful metaphor, but it's not the whole thing. It's not the whole enchilada, but it represents a single one of multiple use cases. But it's one that I believe like Wall Street has just kind of centered around. But I believe the savvier crypto investor understands that there's a lot more under the hood than just, it's digital gold, which everyone is trying to explain so that they can sell it to people who have excess money so they can pitch it to your grandpa, okay, without having to take a couple of hours at a minimum to explain the whole thing. They've come up with their elevator pitch is it's digital gold. It's an inflation hedge. Boom. That's all you need to know and walk away. No, it's a lot more complicated than
that. I don't know. It just feels a little bit like the goalposts keep moving because we were told that like this is going to be how we're going to transact in like day-to-day life. And it's only a matter of time until, I go to the store and pay with something with Bitcoin. And when transactions like that started happening, everyone freaked out. They posted it on the internet and they said, this is going to be everywhere within 5 years. And like, that hasn't really gone anywhere. So then they
get appreciated too quickly.
Yeah. But then they moved to digital gold and inflation hedge. And that has kind of gone away. So now people are like looking for.
What are you talking about? Austin, what are you talking about?
I don't know crypto.
Let's rewind the calendar a little bit, shall we? Let's look at the last big inflation run up, and let's compare it. Let's overlay the Bitcoin chart.
I mean, just because it's outperformed M2 doesn't mean it's an inflation proxy.
No. Yeah. So let's just run it back to the pre-COVID days, the Inflation Reduction Act. Okay, the Bitcoin price was 18,000.
Right. What I'm saying though is the price action is not result. The price action is not a result of the fact that it is an inflation hedge. The price action is a result that people who want to buy Bitcoin continue to buy it, and that the demand is outstripping the supply of Bitcoin. And people like say,
how is that not ever going to be the case? Like if price go up, it not go up because XXX country printed a whole lot of
But
money,
that's
it's
kind of
going to
like a
go up because
circular
there's more
argument.
buyers than sellers.
Yeah, but that's a circular argument. Like you're saying that people will always want to buy it because it's going up, and that's why they'll always want to buy it because it's going up, and that's why they'll always want to buy it. Do you see the problem?
Yeah, well, it's a deflationary asset. So when the currency is relatively stable, it will drift lower.
In theory, I
And
don't
then
know.
and
I
then
don't know if that's what
after
we
and
just
then
saw.
after large liquidity events, or large liquidity supply events, I should say, not lack of liquidity events. After there's a lot of liquidity dumped on the market, Bitcoin just vacuums it all up.
Well, and I think that's actually what it is. Is it's more of a measure of liquidity.
Sure, yeah. Which means you're saying the same thing though. It's a measure of the global liquidity that has been dumped on the market because it just
Well,
absorbs
no,
it
but
all.
being a dollar, like a hedge against the dollar inflating, is not the same thing as being a measure of how much global liquidity there is.
Well, it's not trading 1-to-1 though. It's not like, oh, for every uh bip that the dollar goes down, that Bitcoin goes up.
I just think the price action on Bitcoin has been more pegged towards liquidity events than it has the Fed's monetary policy, right?
Sure. Because it's generally nationally agnostic. There's nothing specifically saying that it has to be pegged to the US dollar. Its price action could be responding to deflation, global deflation rather than US deflation. Does that make sense? So if it's like if the dollar is getting weak, that doesn't mean Bitcoin's getting weak.
Speaking of which, did you have any comments on like the gold and silver, or we can also move to PayPal if that's
I don't know enough about the metals to comment outside of having an opinion about copper, which is actually useful
okay.
Industrially. Not to say that gold and silver aren't. I know they're used in processors, but in such small amounts that we're not talking about real. You're talking about tons of copper being used for versus ounces of gold. Okay. Yeah. So those were trading like meme stocks. What does that tell you? There's too much liquidity. All the attention got sucked into the metals, but it's all going to get dumped, and it'll all end up in Bitcoin.
Or it could just be in lots of volume from really big whales like central banks who are trying to realign their situation, right?
Yeah. Or they're dumping U.S. treasuries to buy, and they're buying gold. That's actually what's really happening.
So I actually looked into this a little bit. They're not dumping treasuries, but they're like not increasing how much they're buying. Like they really are, like they've been slowing down how much they're buying, but they're not going to the open market and just dumping treasuries and hitting the sell button. And I think that's like an important distinguishment, because if we did have like a bunch of countries go and just dump their treasuries on the market, we'd have a problem pretty quickly, right?
Well, it's essentially what the BRICS countries want to do. So,
right. Yeah.
I mean, it doesn't make sense to me. So to me, that seems largely performatively political by those countries, because as the chart behind me, they could have just adopted that. Like if you just wanted to shove your middle finger at the US and really F them in the rear, you could just dump your bonds and buy Bitcoin. You have a functional, it may not be ideal for all of your purposes, but it is at least functional. Although these countries want to control their currency, they're not going to be interested in one that is that they can't manipulate. So I mean, I guess they would choose Bitcoin now that I think about it, but yeah.
Yeah, and I'm sure there was also
They could have, if they just wanted to dump the US, they could have bought Bitcoin, but their issue is they want to control their own currency.
Yeah, I mean, it does look like a real move, obviously, but we don't know how much is going to, like, if it does retrace or like how much of the move actually sticks. Because, like you mentioned, there was a lot of people sort of chasing and FOMOing and speculating on it. So it's certainly getting interesting. Speaking of payments and like stable coins and crypto, PayPal. So PayPal took it on the chin, and we have a lot of smart friends who invested in this one, and they're really really good investors. And I think it's important, to just be realistic about the fact that we don't always get it right. Like I'm semi bag holding on App Lovin right now, in the whole like 25%. And I've sold stocks at a loss. Heck, I even owned Tattooed Chef at one point. It wasn't much, but like what a dumb dummy. I went and even tried the stupid frozen dinner meal, and I was like, oh, that wasn't very bad. And like I went out and bought like $1,000, light it on fire. But some of the helpful lessons that I think we can take away from PayPal is, and part of why I was able to stay away from it when I looked into it, because obviously it's cheap, but cheap isn't a thesis. So we have to look a little bit deeper. And management continued to say that they were going to be growing. That wasn't happening. So there was like a material mismatch between what management was saying and then what the results were actually showing. They were saying that everything was good underneath the hood, and then they basically got rid of Dan Schulman and brought in Alex Chris, and you knew that was going to take some time to actually turn around a boat like that. You saw internal employees for the last several years basically talk about how they weren't really, we'll say they weren't engaged at work, to put it politely, and
Yeah.
the spirits weren't exactly high, and their gross margin and their take rate was going down. So you just had competition swarming in, reduction of growth, and there was no growth story behind it to actually like have any vision into the next decade. So it doesn't really matter how cheap you are if your revenue is decelerating and it looks like you're reaching a terminal type business. So I think that's kind of what happened there, and hopefully there's some lessons that we can learn and be better investors, moving forward. And anyone still in it, good luck. Did you have any comments on PayPal?
Yeah, I had some options in PayPal several years ago, and they did very well initially, and then I rode them all the way down to zero. Because it is indeed PayPal, and a lot of me wanted to re-enter that position, but I fortunately just found other things I liked better. Because I couldn't force myself to buy something just because it had an attractive PE.
Right.
The new CEO he seemed like a good guy, but after a little while, you got to start asking yourself, why is he not making the obvious choices? Right? No one on the street cared about the buybacks. So at some point, you got to say, no one cares about this. I got to figure out something else that they're going to care about. They could have started up a 4% dividend. Do you know what that would have at least caused? It would have caused every dividend ETF to start buying bunches of PayPal.
Right.
And that would have caused price action alone.
But also think about like the missed opportunities too on the growth side of things, because they used to be a growth company.
Yep.
They let Apple Pay, Google Pay, sort of swarm them a little bit from the flanks. And then the opportunity that they missed, Klarna, Affirm, all the buy now, pay later, they could have been in loans. They could have done what SoFi's doing with the loan business platform. They have all those relationships. They know all the merchants and they have all the users too. They even had Venmo, which like think about how much they underutilized Venmo. Like
Yep.
the only thing I use Venmo for is someone sends me money to it and then I send it straight to my bank account. It doesn't even stay there.
Yep. They had such a lead and they squandered it so badly. So I think the best future for PayPal is for Elon to write a check and basically capture, the classic buy or build issue, so he can just acquire payments under the hood and just make it run under X as the everything platform, and now you've got your payment system for X and Starlink.
And he could just rebrand it PayX instead of PayPal. PayX. Yeah.
Yep. Yeah. Get rid of the term PayPal. It's toxic. It already was hokey with PayPal. Sounds like it was a name designed to make boomers feel more comfortable using money on the internet. That is not, the term pal is not something that Gen Alpha is going to care about. So just bring it all the nuts and bolts under the hood, bring it all under X. And it's just going to be how XAI bots and X sends money back and forth. It's got its own stable coin. Like it comes pre-built with a lot of cool stuff. Elon already probably owns a metric ton of shares, so he could very easily make that thing happen, even if he had to do it.
That's like a really crowded space, though, right? Because we had.
Yeah, but does he want to buy or build?
Yeah, it's just does he actually want to be in that space? I know he floated ideas of it, but he
wants X to be the everything app, which means it's got to do payments.
I mean, sure. It's just
Grab does payments, for crying out loud. WeChat definitely does payments, right? So if X is going to be the American version of WeChat, then it's got to handle payments at some point.
Yeah, I don't know. It seems like a crowded space. You've got like Square, Venmo, Robinhood, SoFi, Affirm, Klarna. There's just so many. Discover, Capital One. There's just a lot going on there.
And none of them have free access to LLM, like sitting over the top, plus a giant social media company, plus all the free worldwide bandwidth you could hope for.
So you think if they basically put the payment platform, so say if I want to send you $10, I can just log on to my X,
do it on X,
send it, and you think that would take off?
Yeah. Well, I mean, I don't think either of our X's account are large enough yet, but I mean, X alone would use it to just pay their, to pay the creators that they're doing. It's just a payment platform, right? Then you start having X marketplaces. So not only is it town square, it becomes the marketplace again. Now you can just buy and sell things, and instantly he's competing with Amazon, or at least something like Etsy. He's somewhere between Etsy and Amazon.
It would turn into Facebook marketplaces, really what it would be, right?
Yeah. That's another thing, and that's a powerful revenue generator for Facebook.
Yeah, and not to pick on PayPal too much, because Hood and SoFi have been in the tank as well too. I know
they didn't fire their CEO though. They're not gonna.
Yeah. Their story is not deteriorating in real time, but I know you've got a lot of Hood. How are you thinking about your position here?
I'm regretting not hedging it, for sure.
Or you just straight shares?
I'm straight shares. I'm regretting not hedging the shares, though. Yeah, but you live, you learn.
Yeah,
I think it's probably too late to try to put a hedge on now, unless it's just like an e-stop for the total bottom falling out. But if Hood goes to 20, then the market has bigger problems.
Right.
You know what I mean? I don't feel like it can go much lower, but I mean, that's me. To wrap up on PayPal though, our I haven't actually met him, but I would still say my good friend Roy has been generating a lot of great PayPal content for a long time, and I have always been following it. Like I said, I've always been kind of like with my hovering over the buy button, wanting to get back in, because Roy made really good cases and followed the company really well. And just to thank you, Roy, for all the work you did there. I know you probably made more from super chats than you did from talking about PayPal than you did from PayPal. But it's just really, really funny to me that the day after Roy liquidates his position, share the screen, that the sniper himself comes in.
So what are we looking at here? It's a spread.
Chris Patel opened long spreads on PayPal.
What are the strikes? I can't see them on there. Looks like it's for December of 28, so as far out as you can go.
Yeah, let's see. Is it in the thing here? I think he sold his Verizon position. It doesn't say, I don't think, what the strikes are. But I mean, the break-even price is 56.25. So
so that would make it a $50 strike. Because look, the average cost
essentially.
Yeah.
That seems doable by 28, by the end of 28.
Still a pass for me. I'm good.
Yeah.
There's lots of quality companies out there. I don't need to.
I agree with you.
Yeah, I'm good.
I'm just kind of tickled that, we have one person just saying, no mas, I can't take any more. And that's the day where another guy's like, yep, time to go in. When a guy's been bullish for a long time finally capitulates, that's my signal to go in.
Buyers and sellers. It's a market, baby.
Yep. That's why we have markets. That's what makes this so exciting, is there's always someone else on the other side of the trade.
Yeah, and whoever sold me these SoFi calls, oh my gosh, they're getting me, Dougie. I've got calls that I bought like a month ago that are already in the whole 50%, and they're all leaps too.
Yeah. Hey, yeah. my Zeta leaps, whoever sold those is feeling pretty happy right now. Whoever sold I've got just a few SoFi calls. I'm mostly shares for my SoFi position. It's not very large. But yeah, my Zeta was starting to climb, and then I was kind of happy having it at around 2%, for my open position. So between the shares and the calls, it was about 2%, and it's closer to 1%.
Yeah, all hell broke loose.
Yeah. But all those leaps have plenty of time. They're all 2028s. So, and they're not for high prices either. They're like 20 and a 25 for Zeta. So I feel
I don't know what the market's thinking for either one of these, because like neither of these companies have anything to do with Claudbot. So what's with the steep sell-off?
Yeah, I mean, where is Claude going to have like your first party customer information? No, it's not. I mean, it can make up a bunch of data for you, but it's not going to have any real data. So yeah, it's algos selling off sectors.
Right. And to me, that kind of
today wouldn't have sucked if the president had just called Wall Street and been like, nah, shut it down. I'm the circuit breaker on this bitch.
Well, yeah, it just seems like there's opportunities here. If the markets are actually selling off good companies that won't be affected by this at all. I don't know. Today was the first day since April of last year that I was like, okay, there's some actual red here. I can start buying some stuff. And that's actually exactly what I did. So for the first time in like 18 months since I started buying Google, I sold some shares, sold about 20% of my position, and I sold my my Comfort Systems USA. so I generated some cash there.
Okay.
Google was, again, pushing up against 50% of my portfolio, and it's run a decent amount. And last time we talked, I was like, okay, I'm gonna hold most of it, and we'll see what happens. And that was at 300, and now it's at 340, and everything else has gotten significantly cheaper. So the math changes a little bit.
Yeah.
So, I'm still 35% long, and I loved earnings today. Um, the capex is a big number. I think there's some shock there in terms of how big that number got. But
It doesn't matter what they spend in capex. Their
yeah, they're just marching forward.
revenues just keep going up.
Now the free cash flow has been flat. If you look at their free cash flow for the last 4 years, it's been flat. But
when you overlay the capex that they put on top of it, it shows you that the minute they stop buying, the minute they stop all this capex, it's just going to explode.
Right.
And Sundar understands at this point, not unlike Zucks, that hey, the last one to be adding capex is a loser, but the first one to stop is the biggest loser.
Yeah, and I just think that they're, search back to 17%. Dude, everyone called me crazy when I said search is going to reaccelerate. They're like, no, you mean that it's going to stabilize at 13%, right? And I said, no, it's going to reaccelerate. They're like, you're out of your mind. And
I had to borrow some conviction from you on that. If you don't, so thank you. I did sell all mine though, by the way.
Well, and cloud at 48% with a 55% growth in backlog. I mean, it's just hard to mess with numbers like that. I mean, that's just mind-boggling numbers. So they've definitely earned their run-up, and Sunder's delivering. And I think the story still has plenty of legs here, so I'm still going to hold my 35%. But in the meantime, I had some stuff that I wanted to pick up. I wanted to diversify a little bit into a few different names. So I went on a bit of a buying spree. And a lot of these names have been affected. So I'm going to get back into Netflix. I sold it for a tiny loss of like 12%. But I do want to take advantage of the wash sale, but I don't want to like wash out the rule. Or I want to take advantage of the capital loss, but I don't want to wash the sale. So I have to wait until Monday to actually buy it. So I haven't bought it yet. So I'm going to buy some Netflix. And then I bought back into Fannie Mae. I still think the Fannie Mae Freddie Mac IPO is still a special situation that's worth following. Not investment advice, but like just go look at it and see what Pulte and Basent are saying about it. I bought some TSM. That's always a quality company that I've wanted to own for a long time. And right now they're basically sold out for like the next 4 years.
Yeah.
Like they're just never going to be able to keep up with the amount of chips that is going to be asked of them to build.
Yep. CPUs, GPUs, TPUs don't matter. This is all going to TSM.
All of it. All roads lead back to Taipei right now. And then I also bought some Microsoft because I think that's been treated really unfairly. With the news of them having 42% of their RPO being outstanding contracts with OpenAI. I trust Satya and the management team there to manage the exposure that they have to OpenAI. And I think that they have a tremendous business, even if OpenAI were to go to zero tomorrow. I think there's a few different ways that it could actually play out in the benefit of Microsoft. They could just get all the IP for free and use it internally to accelerate their own business. It's also possible Sam doesn't figure it out and they get to pick up OpenAI for pennies on the dollar. Or OpenAI does figure it out and their backlog gets fulfilled, right? Like they actually deliver on all those RPOs, on all the contracts that driving the RPO growth. And now Microsoft looks like a genius for being first to the party for a huge cloud customer. So that was some of the moves that I made. I also bought Uber, more as like a long-term value / growth play. It's at a cheap valuation right now, but it does have solid growth. They're growing at 22%, and their delivery business is about to pass up their mobile division. So like the actual rides themselves, their delivery is passing that up, and it's actually a more profitable part of their business is the delivery part. So
Well, all I have to say for that is you're welcome, because I just got my like consolidated bill from last week. So from Boca to the airports, back and forth, and driving around there, and then New York, for crying out loud. And I didn't even pay for half of them because Amit did, but my bill was over $1,000 in Ubers for the week. So you're welcome as a new shareholder. That'll accrete to your bottom line, I hope.
And I've used it a few times myself. I got sick earlier in January. I think you remember I missed an episode, and I ended up using Uber delivery like 7 or 8 times that week just because I could not go outside, and it was so clutch. I really liked it. The interface was easy to use. The pricing seemed like just right. Like I know a lot of people complain that it's like a little bit painful to use because like just ordering Taco Bell ends up costing $25, but that's what you're paying for is the convenience. And then Uber needs enough margin there, and they found enough margin, and people are still using the product because you're buying back your time. And I think in a convenience economy, that's going to continue to grow. And I'm actually not worried about autonomous vehicles like blowing up their business model overnight. If you look at the Austin and Phoenix markets, Uber has actually done a really good job in those markets, despite the AVs. So if AVs were going to be killing Uber, we would already be seeing the result of that in the markets where that type of ride hail is already active.
Yeah. What else did you buy?
I think that should have been all of them, I believe.
Nope. There's one I know you haven't covered yet.
Bought so many stocks, I didn't even get to them all. Let's see. I bought some more AppLovin. And I added to SoFi. I bought a lot more SoFi, both shares and options. And then, that was all of them. Which one are you thinking of?
I know you bought another one. I think it was 150 shares, something like that.
Oh yeah.
Initiated a position.
It wasn't in my post, so I didn't think that. I was just reading off of the post of what I had posted on X.
All right. Somebody needs to edit their post then. Yeah.
Yeah. So I bought 125 shares of D-Wave.
All right.
We're in D-Wave.
The quantum revolution.
We're there, and the idea here is that it's a 2-decade long bet that it's just enough there, like a little seed investment, and if it ends up popping off and being a thing and a really important technology, this is where I'm going to trust some friends of mine who are a little bit smarter than me in these types of scientific realms. Shout out to Quant Tesla, who also knows more about quantum than. She's forgotten more about quantum than I'll ever know. So, we're
Your boy Siege.
Is Siege in it as well?
Yeah.
Okay.
He was at the conference with us. We're sitting at dinner and he's asking the the PhD in applied mathematics. So is this multicolor or is this holographic? And I'm just like, okay, You ever like, I generally consider myself to be a sharp cookie, smarter than the average bear, at least, right? I mean, we have a lot of really smart friends, and I'm not saying I'm the smartest of all of them, but generally higher level. Well, when I was in some of the rooms there, it was like very clear that I was the dumbest person here by like 50 points, like 50 IQ points. Like I definitely felt like there was a lot of big brains there.
That's a good thing, though. That's how you end up learning a lot.
Oh yeah, I yap a lot, but I actually had to make the point of, Doug, just go sit at the table and shut your mouth and listen to people smarter than you talk about whatever they want to, right? And yeah, it was interesting. Sat with all kinds of different people. I actually have a lunch this week with a D-Wave person in Houston to go over oil and gas business stuff.
Nice. And do you know what the application there could be yet, or is that what they're trying to figure out?
All right, little column A, little column B. I have some ideas, but I don't know if the juice would be worth the squeeze on it. But I mean, hey, they offer a cloud service, so it's not like, my company has to buy a quantum computer to do this. The case is really that, though, they more like they need to figure out what how to come up with an algorithm, and maybe it's an NP hard problem and maybe it's not. But that's what we're looking for. Is we're looking for things that they can help us with. But yeah, they had some really fantastic stuff.
Now, if quantum ends up cracking crypto, the quantum companies become extremely valuable overnight. Is that true?
No. Here's the problem with crypto. I can break this down. So I did learn a few things. I can break this down, I think, pretty easily now. The problem is essentially Bitcoin and Satoshi Nakamoto's wallet. So the way Bitcoin works is if there's going to be a change to the protocol or change to the encryption, you're going to need consensus, which means you're going to need more than half of all of the Bitcoin wallets to agree to upgrade their software. And then everyone is going to have to upgrade their software. No one can upgrade Satoshi Nakamoto's wallet to so essentially making Bitcoin quantum proof or quantum resistant encryption is not the problem. The problem is getting the network to absorb and upgrade to the new standard if you cannot get all of the Bitcoin held by Satoshi Nakamoto to do that. Does that make sense? Because you require so much consensus to do those things. They would have to fork Bitcoin. It would have to become QBTC or something like that. And legacy BTC would be hackable, but they can make a quantum resistant Bitcoin. But ultimately, if you have the tech to hack something as sophisticated as Bitcoin encryption, why would you just not? Trust me, it'd be way easier probably to hack a nuclear missile and then just hold the planet hostage than it would be to hack Bitcoin.
Gotcha. Did you have any thoughts on the spat between Jamie Dimon and Brian Armstrong? Basically, Brian Armstrong at Davos accused the banks, and I think he even specifically named JP Morgan, of kind of squashing the crypto bill that was working its way through Congress, and said they basically poison pilled it, and it was a step backward in the wrong direction because the explanation that they gave was if stable coins become really prevalent and they're able to offer treasury like yields, then a lot of dollars are going to flow out of the legacy banks that are brick and mortar, like your Wells, your Bank of America, and your JPMs. So they have a vested interest in swatting down that legislation. I haven't been following it that closely other than what I just mentioned. Do you have any thoughts on that, Doug?
No. I mean, both of those CEOs are advocating, or they're not advocating, but they're trying to get in the ears of the powers that be to benefit their companies. So they're going to compete along, on multiple lines. And we know Jamie Dimon hates crypto, even though he's selling it now. So I don't see why that is surprising at all. If Brian Armstrong would kind of never have been aligned with Jamie Dimon. So I'm not sure why that would be a thing.
Well, and to that point, you know, the president and the West Wing are picking the winners right now. And, you know, Ken Griffin even made a comment about that, about like that's probably not the best thing to have an economy in a market where, you know, everyone's just buying and selling stocks based on administrative policy that's happening in the Oval. There should be some organic growth there and some organic winners. And the last few months have kind of felt like, you know, be ahead of the curve before the legislation happens and you win.
Yeah. But if you want to take just a couple of fun bets right now, I thought I could share a few pictures from.
Do you think he could run for office, by the way, Ken Griffin? Or do you think just like the fact that he's a billionaire and like is a Wall Street guy is like enough that people would hate him?
I mean, Donald Trump won office and he's not nearly as smart. And he's a New York real estate developer, so yeah, you can share the screen. There's the gang.
Nice.
Laura, Tess, me, Siege, his brother Josh. This is another couple of guys we added to the Entangled Gains group as well. There's I'll let them introduce themselves later if they want, but a couple of really sharp young investors we met as well while we were out there. That was us at dinner one night. This was us, just the fellas. We were hanging out, and we actually ran Tess and Laura that they were like, oh, we have to go to bed. So the fellas went out and found another bar and made some friends at the bar, and they
Hell
went
yeah.
back to the hotel.
And here's this comment. I'll be in the photo next time. You were even messaging me saying I should come.
Yep. It was a lot of fun.
I'm always down to go to Florida, man. I'd love to come. I'm not sure my 125 shares are going to cut it, but like I'd love to come.
You really needed to be. Plenty of people were there that didn't have shares, but were there to learn.
Okay.
And so if that's what you're about, you can learn a lot. So I mean, you can see one of the presentations was about blockchains and about the Bitcoin issue, and then creating a quantum blockchain. I actually didn't get to go to this one because of some of the counter programming that was going on at the same time. Let's see. Yeah, this is just us hanging out. Let's see. I actually don't know if I shared it in the group. I might have to find it on my photo somewhere else. Yeah, so Gene came, and then it was awesome. He and I had dinner here in Boca, and then 2 days later we were having dinner in New York.
Well, Gene lives in South Florida, right?
Yeah. Yep.
Okay.
This was me, Siege, and Tess having dinner in Oysters after. You know Tess, you know she loves her oysters.
Oh, yes, she does.
Yep. And then I got on a plane to go to New York and was flying over all this. I know I do have a photo of the processor itself, and that was pretty cool. But yeah, I mean, I wish I had more photos queued up for to share, but you know, there's a lot of places you can't that you won't have access to. That's like, you know, I'm not getting invited to the Hood conferences or anything like that, right? But okay, the D-Wave one, that's a small enough company I can get invited there. Awesome, right? And they're setting up like a new quantum research hub on the East Coast, and it'll be in Florida.
So more Florida trips is what I'm hearing.
Oh yeah. I already it's February 7th and 8th next year. I've already told them to put me on the list. So that'll be a good time.
So what I'm queuing up here, I had a friend ask me about Palantir because he never got in it.
Oh, okay. Sorry.
Palantir earnings. We got to talk about it.
Okay. I have said before on this podcast that the Q3 Palantir 2025 Q3 earnings were pornographic. And if that is true, then the Q4 2025 earnings are like 4chan level of absolute degeneracy. Like abilities to chill. Yeah, this is just this.
And you're just talking about the top line plus the margin expansion, right? Like the obvious.
Like, yeah. Everyone, this company cannot be overvalued. Like, yes, I know it's expensive. Has to come out of the lexicon when people are talking about Palantir. It's not expensive enough. They have an unlimited TAM. They are addressing a tiny part of it. The only thing that can hurt Palantir at this point is that they don't start offering SMB products, and some other company gets just enough of a foothold in there where Palantir becomes like the legacy big company servicer, and they give away the bottom 2/3 of the market. But I don't think Carp is going to do that. I just think they need a product that's a little bit better suited to that market. But then it's like, well, why would they if they're just increasing the value of the deals they already have? They actually lost customers. Their customer count actually went down.
Yeah, I mean, either it's for you or it's not, and you're getting value or you're not. So the people who are getting value are continuing to use it more and more and continuing to get value. And it's, what do they call it? Mutual self-pleasuring. I think that's what Carp called it. I just wanted to do a quick sidebar that might be like a little rudimentary for people who have been investing in growth stocks for a while. But when people talk about the PE of a growth stock that has just come profitable, I think a lot of people lose sight of the fact that when you're scaling like this and you go from $200 million of net income to 1.6 billion, that is an 8x. In 2 years, you've 8x'd your net income. So to put that in a practical example, if your PE of a company was 400, people will hear 400, they say, oh my God, 400 PE, I could never buy that stock. And then the company over the next 2 years does an 8x of their net income, you're now paying a 50 PE. It went from 400 down to 50 just because the net income went so crazy. And guys, look, this trajectory, this is just getting started. If you look at the revenue, it is ramping.
Oh, that is the start of an S curve. That is the start of an S curve, bro.
And so what this looks like in terms of something like a forward PE, so the conversation I had with my friend is he had missed Palantir, okay? He never got in it, and he saw it go at 70, at 90, at 120, at 140, at 180, and he's like, oh my gosh, it's just going to go up. I'm never going to be able to get into it. The stock has basically been flat for the last, 6 months, 9 months, maybe even a year at this point, because now it's down to 139. And
it's still well above where it was on election. I think on election day it was like 60.
Okay. Now the net income has basically doubled year over year. So if the stock trades sideways and the net income doubles, again, the same principle I just talked about still applies. Your valuation is now half half the price of what it was before the net income doubled. So if we look at the forward PE, we can see that it was a sky high 246, and the stock has only gone down 30%. But look at the forward PE. It's gone from 246 all the way down to 105. And I know that's still on the high side, but you can see that that's just them reporting 2 quarters.
Yep.
From 246,
in 2 quarters,
191 to 105.
And remember, the best things in life are expensive.
It sometimes it feels like you're overpaying when you're buying a building in Manhattan, but you're buying a building in Manhattan.
Yep.
You know what I mean?
Did you watch? It might have been Compounds and Friends or Animal Spirits. But Batnick had a great line, and he was quoting someone else. I don't know who it was. He says, "I don't need a financial analyst to tell me when a stock with a 10 PE is a good price, is cheap. I need a financial analyst to tell me when a stock with a 50 PE is cheap." And so, Austin, you're not a financial analyst. This is not financial advice. Is a stock with 100 PE cheap?
It can be. It
Okay.
depends. Is there?
Can you cover another metric? We actually had a question from the chat. Somebody asked if we could explain, and you're better explaining this stuff than I am. Could we explain what the rule of 40 means and how they got to 137%? Yes. And I'll just preface this, Parsa Janky, by saying 40 used to be like the home run number for this metric. It was like, if you hit 40, you are a real deal, big boy, grown up, professional company, kicking ass and taking names. And Austin is pulling up the explanation of that.
Okay. Oh, that's not the right one. Let me try that again. There we go. We like this one better. Okay. So the rule of 40, as Dougie was saying, a lot of software companies will use this as a way to judge the top line growth along with the quality of that revenue. So how much revenue is actually coming to the bottom line. And in this case, Palantir is way up here. Now there's one company missing off of this chart here, which is AppLovin, which is around a 140. So they would actually be, even better than Palantir, but that's a different story for another time. But what this tells us is that not only are they growing at a ridiculous clip, but they're dropping a lot of that money to the bottom line. And
sorry, when we say dropping money to the bottom line, we mean they made a lot of money, and then after they pay all their expenses and bills, they have a lot of money left over.
Exactly. Yes. So software companies historically have a really high gross margin because it doesn't actually cost anything for cost of goods sold. Well, I wouldn't say it doesn't cost anything, but the gross margin is usually really high. So Palantir, as an example, has an 82% gross margin. Most of the expenses are going to come on like the SG&A and R&D side. And then of the 81%, 31% of it is operating income. And then their profit margin is actually even higher than that. So for every $100 right now that Palantir makes, 36 of it is actually going into the value of the company, which is why they have grown from $2 billion of cash to having $7 billion of cash in the last 2.5 years. What they're going to do with all that cash, remains to be seen. And then their free cash flow margin is 50%. So what we're seeing is 2 important things happening at the same time. The revenue is growing. So most software companies that have revenue growing, they are going to be hitting a certain point of scale. And if the SG&A and the operating cost of the business stays flat like it has for Palantir, then you get the second thing, which is your margins expand as you're growing at the same time. So it's kind of like a throwing gas on the fire, if you will. The fire has already started, and that's the revenue growth. But now you're really pouring gas on the fire by expanding the margin at the same time. If Costco or Amazon were to expand their margin by 1% each quarter for the next 5 years, they would be the richest companies in the world. Margin expansion is super, super powerful and underestimated, especially over the long term, because, it might be inappropriate extrapolation to do this exercise, but if you said Palantir is going to continue 60% for the next 3 years, and their profit margin is going to expand from 36% to 50%, that those numbers are going to look really, really, really strong, and they're going to grow into that valuation rapidly. Not to mention that they have vendor lock-in and they have no competition. Did that explanation go well?
Yeah, I thought it was good. PB Hack is comparing Palantir to Cisco in 1997. But I'm like, Cisco is a hardware company. Okay, so Parsa Janky got it. Okay, good. Thanks for the explanation, Austin. All right, what do we got next in the doc?
We had like Jensen making some weird comments. I guess I could pull the clip here, but basically what he said was, I think a lot of people heard what they wanted to hear back in September when they initially made the announcement. He said that they were going to do $10 billion invested per gigawatt. And now that for some reason it's resurfaced of like, are you still committing $100 billion? They're making it seem like he committed the whole $100 billion at once. But, Jensen also seems to be somewhat walking back. He said, we might reconsider at some point, like at later rounds. Like he makes it seem like there's going to be reconsideration done at each gigawatt rather than him committing to all 10 rounds under the condition that the power gets there.
Yeah, I mean, that makes sense to me. It was like, I don't know. My sense is the journalists thought they were interviewing Donald Trump, and they were really interviewing Jensen. And they were just trying to play gotcha with him. It was like, well, you said this. I was like, okay, well, no. It doesn't matter what you think I said. It matters what we're going to do. And I'm trying to be as politically, I'm trying to as gentle here as possible, but we're going to evaluate each deal that comes to us individually. Essentially is what I heard.
Right.
Like, we're not putting 100 billion in. Like they're going to have to tell us what the valuation is like every time. Right. Like we're not just dumping cash into them. They've invited us to, which is great, but that doesn't mean we're obligated to do it.
Yeah, I mean, obviously they're not obligated to, but I think it almost seems like Sam crossed Jensen in some way, because back when they announced the deal in the fall, he did seem a lot more excited about it. And Jensen never, ever talks bad about his partners. I mean, at that point, when it was happening on Mitch stream in the comments, I was screaming. I'm like, he never talks bad about his partners, but you could tell that he's frustrated.
Yeah.
He has really, really good composure, and you can start to see even he got a little bit frustrated with maybe the AMD deal, or maybe just Sam's inability to actually fulfill his commitments, let's say. Like it seems like he is taking on more than he can chew a little bit, and I think that's starting to get to Jensen, because it's starting to jeopardize the whole mission of AI. Is that if it's all leaning on, if it's all dependent upon OpenAI to succeed, I don't think that's what Jensen wants. I think he would like to see balance to the whole technological wave.
Yeah. Well, and he wasn't thrilled with the AMD deal either. He's like, well, I mean, I guess you can give away a tenth of your company if you want to. I mean, I didn't have to, so Lisa's got to do whatever she's got to do to catch up, right? But um, yeah, I guess Jensen felt like he kind of had a almost an exclusive partner with OpenAI. But to be honest, feels like ChatGPT is slipping. OpenAI is slipping a little bit, so he might be better off. Be having limited exposure there and pivoting to the real winner, which might just be Anthropic.
Well, they had all their talent get raided, and there's been political infighting there for quite some time. You've got the Elon lawsuit, you've got the mismanagement of the Microsoft relationship, and them never seeming to be on the same page, really at any point.
True.
You also had, the Oracle RPO thing was weird. That the huge RPO jump from Oracle, that was really, really strange. Him committing money to the data centers before he actually had the money. Remember, there was that Elon tweet saying he doesn't actually have the money, which was true. He didn't actually have the money. It just seems like some of the chickens are coming home to roost a little bit. And not to pat myself on the back for Google, but it seemed clear to me that Google was going to have the economic advantage. And having listened to Karp talk about how LLM is the commodity, I kind of saw them getting steamrolled. I didn't think it would be this bad. I thought Sam would figure it out. But yeah, you're right. Anthropic is kind of eating their lunch right now. And Gemini is pulling away the consumer as well.
Mm-hmm. Yeah, I mean, I feel like there's a certain sense that OpenAI was too big to fail. And it's not even public. Like, how is that? How did we let ourselves get to this point where private equity has accrued all of the value out of this entire ecosystem, this entire trade, unless you own NVIDIA and Google's only got a double, so we can barely say that. So unless you have NVIDIA or Palantir, the AI trade, those were your way into the AI trade from the early days. And you never got access to the supposed leader that was OpenAI, and they may have mismanaged it. And so now it's going to take down private equity, and they're going to come get some, they're going to get some kind of bailout. Probably means they just go public and dump a bunch of shit company shares at $1 trillion valuation on the public.
See, I don't know if they get it.
There's nothing you can do about it if you've got an index fund, because they're going to buy it on day one.
How do they get $1 trillion though? Like, I don't think $1 trillion happens. Like, I'm not buying shares at $1 trillion. I'm not even buying shares at 500 billion.
I'm sure there are multiple banks who do not know jack from squat and are super anxious to bring this thing public in the biggest spectacle ever on Wall Street, in the history of Wall Street, and they're just going to sell this shit company to the public because, hey, that's their job.
Yeah, and you could tell something was really going wrong too when you start getting asked questions and basically being accused of knocking people off on Tucker Carlson. You had ex-employees who were like leaving the company to start their own thing. That happened 2 different times. One of them was called Safe Super Intelligent. Yeah, and then
what did that tell you, that the one they were working at, they felt about the one they were working at? Yeah,
exactly. And then really kind of the final straw of like, this was the nail in the coffin for me when I knew they were not in good shape, was when he lashed out at Brad Gerstner for basically saying, hey, how are you going to pay your bills? Like, he got very defensive over that question. And, as an avid BGT watcher, like the Bill Gurley and Brad Gerstner podcast, they've since retired it. They don't, Bill gave it up. But, I watched every one of those episodes, and, Brad would go out of his way to talk good about OpenAI, and Brad goes on CNBC all the time and talks how good OpenAI is. Even goes out of his way to disparage, Google a little bit, to talk his book, if you will. And I did not like the way that he went after Brad just for asking a very simple question that should have been really easy to answer.
Yeah. Like, what did he say? Oh, we can find somebody to buy your shares.
Yeah.
Like, if you went out, get out. But I'm just like, no, I'm trying to be a responsible owner of my shares.
Well, and he's also giving, it's like, dude, Sam, he's giving you the platform to speak your case and sell yourself and the company and the vision to the public. But instead you just, and you even saw today with the Anthropic ad. Did you see this? There was an Anthropic ad.
Oh, I saw that there was one. I was like, oh, this looks stupid. I don't have the time for it. Because
this is actually great. Here, I'll pull it up. Sam responds to this ad. So I'll just pull up the ad. We'll watch that first. I know.
Since we're not monetized, no one cares if we play the music. Haha. No audio.
It's amateur hour over here. Oh my goodness.
So, what do you think?
Absolutely. That's such a fun and creative business idea. You've got something really special here. Getting started can feel daunting. I can make a step-by-step mini business plan. Do you want me to do that?
Yeah.
Absolutely. Here's some steps you can take. 1. Research. Really get to know your audience. 2. Think of a catchy name and start your social presence early. 3. New businesses often struggle with cash flow, so try quick dash payday loans because girl bosses need CEO money quick. 400% APR rates may vary, possibly doubling or tripling without notice.
Yep, that's what's coming.
Would you like to make a quick credit check?
What's the difference between me and you? Me and you, me and you.
They called it. That's exactly how that is going to be implemented. Or
So
you hope it's so overt. You hope it's that overt.
So here's what happened in response to that. Let me find it here.
That's a great ad, by the way.
It is a great ad. They nailed it. Sam went off. He was not very happy about that advertisement.
They didn't name his company by name either, but we all knew.
So look at this. Look how long he wrote.
Jesus, man. Who is this? Bill Ackman Jr.? Like,
yeah, so he does write some long Twitter posts too. So he says, first, the good part about the Anthropic ads, they are funny and I laughed. But I wonder why Anthropic would go for something so clearly dishonest. Our most important principle for ads says that we won't do exactly this. We would obviously never run ads in the way that Anthropic depicts them. We are not stupid, and we know our users would reject that. He goes on to talk about how Anthropic is using a deceptive ad, and he says that they're committed to free access, which is going to create agency, and that's why they're going to have to eventually go to ads. But then he gets kind of petty here. He says more people in Texas use GPT for free than total people use Claude. He says Anthropic serves an expensive product to rich people. And maybe more importantly, Anthropic wants to control what people do with AI. They block companies they don't like from using their coding product, including OpenAI. And then he paints himself as the good guys here. We're committed to broad democratic decision-making in addition to access. We are also committed to building a resilient ecosystem. We care a great deal about safe, broadly beneficial AGI, and we know that the only way to work to get there is to prepare. one authoritarian company won't get us there on our own. We're enjoying watching so many people switch to Codex. Talks about 500,000 app downloads since Monday. And I believe Codex is going to win. So there's some corporate shit talking here. But I don't... Dude, he just seems so petty. So petty.
Yeah, he is. Like he's telling on himself because he could have said, I don't know who that ad's about. No, he knew who the ad was about.
Yeah, it's if the shoe fits, right?
Exactly. It's like it what's the line, the Shakespeare, she doth protest too much or something like that, right? The lady doth protest too much.
Now I did find the Jensen clip that I wanted to roll. I thought
Okay,
that was
yeah, play that.
pretty good.
This is a man about to lose his mind with someone who has an IQ 100 points lower than him.
Confusing to me why both the initial deal that was announced, and we were talking about one that has not been confirmed, where you're talking about putting money with, and this is separate from the second one with the deal, in order to be able to invest again, to be able to make it so that 1 gigawatt, 10 billion. And then the second thing about the investment with the in a possible IPO, we keep hearing from the Wall Street Journal, from Reuters, the deal's on ice, that it can't be done, that there's so much dispute. Another thing that makes me upset, Jensen, is that perhaps it is possible that there's motivation here to kill the deal, because I'm not hearing anything from either party that sounds like this.
Well, nothing that we're doing on the inside is that dramatic. You know, there's a lot of stories about it. But I think that OpenAI and Sam are doing a great job raising this current round. This will be the largest private round ever raised in history, and I don't know any other company that possibly could do this. I mean, all of this is possible because the amount of offtake, the amount of traffic, the amount of interest that they have in their product. What they need more than anything right now is compute. When they have compute, it will directly translate to revenues for them. Because as you know, in the world of AI, infrastructure, the computing, the AI factories is what produces the tokens, the AI that ultimately drives their revenues. And so the more compute they have, the greater revenues they will have. And so their trajectory, their revenue growth trajectory is going to be unlike anything the world's ever seen. And this is a great investment opportunity. I'm delighted to do it. In working with OpenAI, there is no drama. This round's going to get done. It's going to be the largest round in history. It's going to be oversubscribed. Okay, but remember, it's going to be.
There are two rounds. There's two rounds. There's the September deal, where you talked about 10 billion per gigawatt, and that was pre-AMD, for instance. And then there's the round for the IPO. Are both of them on? Because the first one there's a lot of talk that one has just kind of gone away, that you're not going to do that deal, the original 100 billion. This is the last I will ask of this, because I think we can put the end right here to questions about whether that first deal is on or off.
The first deal's on.
It's on.
I think I think there's a round that OpenAI is going to do, that Sam's going to do before the IPO, and if that round is on, then we're in, and I think the round is on. Okay. And then there's of course an IPO in the future, and we'd love to be participating in that as well. And so this is a fantastic company, and this, as I've said before, this is a once in a generation company. We're delighted to invest in it.
Well, it doesn't sound like there's a rocky relationship between the two. It doesn't sound like the deal's on ice. It doesn't sound like there's grave problems. It doesn't sound like there are 8 different sources saying this one can't happen. It doesn't sound like any of that to me.
And there's no drama involved. Everything's on track.
All right, I'd like to go back to substance. I appreciate the.
Who's buying it? Put in the chat. Are you buying what Jensen is selling here?
The horse race deal. It's important.
I'm buying
for some
Jensen
people.
is fed up with it.
About the 90 trillion that is the world economy. And I want to go back to Pascal, because I think that it's only fair to say that maybe we.
Okay, honestly, we can stop it there.
What do you think, Dougie? Do you believe him? You think he's playing nice, or do you think?
Well, he answered your question on who's going to bankroll that $1 trillion valuation. He said if they go for IPO, we'll be investing. So
yeah, that doesn't mean that they'll be able to do all like that. That could just mean that we're investing in terms of like we're going to give them chips, right?
It could be, and that's something you never really know with these deals either. I mean, that could be this deal to begin with. We're going to give them, for every gigawatt, we're going to give them $1 billion worth of chips or whatever it is, right? So, or 10 billion, whatever the number was. Um, the
Well, you're still
like,
holding NVIDIA.
Jensen's just yeah. NVIDIA is one of my core holdings. Yeah, video went down another 10 after that segment. True, but so did the rest of the market. And to be honest, if Jensen had divorced like just right then and there, NVIDIA might have gone up. Like there's a lot of there's always been a lot of kind of anti-Sam sentiment, right? That's just kind of been hidden by the fact that he's got so much valuation in ChatGPT, but now that there's cracks in the armor of OpenAI, I don't know if this seems like he's going to fumble the bag in an epic way, or let's just say I wouldn't be surprised to see it. Now I don't know how to hedge against it because I think for at least short term, if there's a hiccup in OpenAI, everybody's going down. But that doesn't mean that everyone that doesn't mean everyone is bad. It just means everyone goes down, and then it takes the market a little while to figure out who's left, and they'll go back up.
So two names immediately come to my mind, and that's going to be CoreWeave and Oracle.
Well, for people that are screwed, or for people that can survive it.
For hedging opportunities, if you're an NVIDIA long and you're wanting to try to mitigate some of the OAI risk, I think CoreWeave, they get 60% of their revenue from Microsoft, and I'm sure a large majority of that's going to be OpenAI related.
Okay, so those two as a proxy, you're saying for OpenAI
or Oracle, yeah, because their growth both.
Oh, I'm saying I want to reduce my exposure to OpenAI.
Right, so you would have to go short CoreWeave and.
Oh, okay.
Yeah.
Short them. Okay, I thought you were saying to get in them. So, no.
No.
All right, that makes more sense.
Yeah, those two
just
companies.
Microsoft.
Yes and no. Here's the thing,
or did that already play out?
Well, yeah, that already played out. That's a good point. But also, number two, they just have so much positive net income, so much free cash flow, so much other business to it that's so profitable. It's such high margin that it just really doesn't make for a good short candidate. Just seems like the math is going to be against you.
Yeah. For buying, for selling short for sure. But I was thinking more like buying puts.
Oh, Oklo, duh. Right, that could be your way to reduce exposure.
I don't know. They're still pretty heavily tied to Sam, even though he did leave the board.
Yeah, that's what I'm saying. If
to short them, you mean? Okay.
Yeah.
Sorry. Same point, Doug.
Nothing's changed.
Yeah, you're just throwing names out there, and I'm like, why would I buy that? And you're like, no, it's for the short. It's for the puts. Yep, that would be a good name to get puts on as well.
Probably pricey though, right?
Probably.
Yeah. One thing that I just want to point out.
That's true. Dr. Bratz did say short the energy stocks.
Mm-hmm. One thing that I think could be interesting is one thing that I think is interesting, is the private equity firms. So yesterday you had Ares, Apollo, KKR, Blackstone all get crushed pretty hard, 5 to 10%, which is not usual for those names. The last time we saw moves like that was back during Liberation Day. And we also saw the cybersecurity names get hit, which are, in terms of software and SaaS names, the cybersecurity names are typically holding up a little bit better just because they have such an obvious long-term tailwind to them, and they're mission critical. So they have strong pricing power. I wish I knew more about cybersecurity or even these private equity firms. I'm probably not going to be buying Blue Owl Capital anytime soon, but maybe something like CrowdStrike or Palo Alto looks interesting.
Well, one thing we need to do at the next meetup is treat those more as networking events rather than hangouts. I literally had a 2-hour conversation with probably more like an hour conversation. Matt got the second half of it with a CrowdStrike software engineer. Came to the meetup the night before. We're just hanging out at the bar at the hotel.
What did you learn?
That I know very little about network security.
Right.
But my point being, I should have made a more permanent contact to have found someone who could teach me about it. That's what I mean.
Yeah, and here's where it gets tricky, right? Like names just start getting thrown out. Like you've got SentinelOne, you've got Net, you've got Rubrik, you've got Coherent, you've got CrowdStrike, you've got Palo Alto, you've got Fortinet, and before you know it, you're looking at 8 different stocks, and you're like trying to figure out what the difference between all their different products are, and it's the visibility. Unless you actually know what you're doing and like you are a domain expert in that space, like I couldn't tell you that like the core differences between each one of those products.
So I buy Hack.
Yeah, but then you're gonna have some Broadcom, and I think Cisco's in there too, right?
Sure, makes sense though. I wish it wasn't, but I mean, I wish it was more of a collection of pure plays. But I mean, Cisco hit all-time high.
Yeah.
So that's not dragging it down. Wait, silver's down 11% tonight?
Is that right?
It's 24/7 market crap. Got me feeling a certain type of way about, can we not do the 24/7 or 24/5 markets, please? Like, this stuff has to be able to go to bed tonight.
Yeah, and on top of that, you've got Zscaler too. Totally didn't even mention them.
Yeah, looks like overnights have reaccelerated the downward slide. Got a little relief at about 2 p.m. today, between like 1 and 2, but giving most of that back tonight on the high beta stuff.
Got it. Well, I think that basically covered the docket. I think we actually got through it all pretty relatively seamlessly.
Did we really get all the way through it?
Yeah. Yeah, we whizzed right through because I started getting on a roll and I started talking a million miles a minute. Someday we'll have to dedicate an episode to Fannie and Freddie, because that's a whole onion to unravel, if you will.
Yeah.
There's lots of layers to it.
Speaking of Bill Ackman.
Yeah, I bought 2 Ackman stocks, Fannie and Uber.
And a former one with Netflix.
And a former one, that's right. Yeah, so I'll be buying back into Netflix. Honestly, like that price action in January and December was just brutal. And I just didn't want to hold on to it while all the headlines were still flying. It just seemed like the buyers were not showing up. And I wanted to buy the dip on SoFi. SoFi is becoming a larger and larger and larger position for me. But I am excited to get back into Netflix because I feel like it's got good long-term value there. I don't know. Their business model is just honestly pretty sick. I think, are you frozen on your screen or is that just me?
I might be frozen on my screen.
Okay.
I mean, man, I'm looking at this Robinhood though. Like Robinhood got to 65 at one point and then went back down to 34. Like we're flirting with that 65 level again. Like that's back in play somehow.
Do you want to pull up the hood chart?
I do not. I have it open right now, and I've seen enough of it.
It's not a good
I really need to decide what I'm going to do. Am I going to hold this sucker? Because if I decide that I'm just going to hold, then you just bite the pillow and suck it up, right? Or you just exit, cry about the 50% you left on the table, but celebrate the big win.
So I sold all of mine at 130, and when it went down to 85, I did start to think about would this make sense for re-entry? $80, we're getting there. I think
we're past it now.
I'd be very surprised if we got under $60. That's what I'll say. So I think you're getting close.
I mean, we're at 78 now. So if you wanted under 80, congratulations.
Well, I'm just saying 80 is when I really start to think about it. That doesn't necessarily mean that's when I pull the trigger, but
well, from a technical, I'm just looking at this technically, that's going to be, we've got to be close to the bottom. This should not visit 65 again. But I don't think it'll go up in 6 months from 35 to 148 again.
Have you ever looked into IVKR?
I've thought about it for a few seconds, then we're like, I feel like I've got what I want in that particular domain.
So I did some research on them, and they've got just as strong of an operating margin. So they could almost just as validly, they don't move as fast, but they could almost just as validly stake a claim that they're more of a technology company than a finance company. And they've also grown users really, really well. And they seem to have more diversification outside of just your quote unquote degen retail traders. So less dependency on crypto and options contracts, although that's obviously still a driver of their growth when there's a bull market. And also 1/3 of their revenue is international. So that helps as well. I think you could look and compare those two businesses, and then you can start to get a really strong idea of is Hood more expensive than this company or less expensive? And you could use that to help maybe influence your decision making.
Yeah. I just wish I'd had a hedge on. Then I'd be a lot happier. But you live, you learn.
I think Amit sold a call.
Yeah, he sold calls he sold $75 calls.
Okay, so that's basically selling.
Yeah.
Yeah. And it worked out for him because $75, here we are.
Yep. $77.99 now.
Well, I think that just about wraps the show. I think we're still gonna do. We got on a little bit early because I was working from home this week. But I think usually 7:45 on Wednesdays is the normal time. We've got both of our X's in the description down below, as well as the Street Exchange, which is the channel that has all the times and all the creators and times when their shows are. So go ahead and check that out, and we will see you guys around. Thanks for watching.
Yep. Good night, everybody.